So the collapse in PayPal's price that we saw this week might be the greatest buy-in opportunity that I have seen in years. So stay tuned, because in this video right after the intro, I'm telling you exactly all that you need to know and to distinguish whether you should jump right into this stock or wait a little longer, or do not touch it even with a 6-foot pole. Hello and welcome to another video by HKCM Global. My name is Joe, and you obviously are an informed investor. Otherwise, you wouldn't be spending your time here on YouTube watching stock videos. So the stock drop in PayPal this week is no news to you whatsoever. So that's why I want to focus right now on the long-term outlook and on a few numbers that few people have on their radar. And I really do not understand why exactly that is. Because let's just do a little recap. What exactly happened and where exactly are we at with PayPal? So again, just a brief summary. The earnings, right? Tuesday of this week, overall revenue was a surprise to the downside by 1.28%. And the earnings was also a negative surprise by 4.4%. And sure, probably the worst amongst all of this was the outlook that also wasn't that great. But I mean, we're talking about a revenue surprise to the downside of 4%, and we saw a loss of 20% in stock price. Are you kidding me? This is getting irrational here. And it gets way more irrational if we jump a little deeper into the financials for PayPal. So currently, as we speak, as of the recording of this video, we are talking about a PE ratio of 7.7 for a tech company. Are you kidding me? We're not talking about some car manufacturer with struggling margins. We're talking about an agile, still growing tech company that is a well-established brand. Everybody knows about PayPal. Everybody in the United States uses Venmo. That is a super stable company. And look at the financials even, right? And for this long-term outlook, probably the annual perspective is more interesting. So 2021, 25.5 billion in revenue. Following year, 27 billion, 29.7 billion, 31.8 billion, 33.3 billion. So we are growing. So why exactly do we take a look at the stock of PayPal and see this huge collapse from roughly $310 back in 2021 down to currently $40 roughly? Why do we see an 87% drop in the stock? We do not see a collapse of the company of PayPal. We do not at all see a collapse of the business model of PayPal. What we do see, and quite frankly, I do not understand why it took us so long to do so, is the collapse of the growth story in PayPal. During this time, this was the mad COVID era, right? Rates super low, and there was this narrative that PayPal is just going to explode because everybody is going online and nobody will ever again purchase anything in a store in person. So a completely bonkers story, but the overall business model of PayPal is completely intact. And I mean, going back to 2020, even before all of this madness started, we were sitting at a stock price of 120. Back in 2019, also sitting at 120. So going back to 2018 even, we're sitting at the stock price of 90. So how far exactly do I need to go back to again find the levels that we're currently at with PayPal? So roughly, I have to go all the way back into early 2017 to see the stock prices in PayPal that we're seeing today, 2017. So 9 years of growth in the company of PayPal, completely discounted by the stock market right now. And of course, what we saw here was a complete exaggeration and had nothing to do with reality whatsoever. And there's even another rather justified critique for the whole PayPal business model, and that of course is cryptocurrencies, right? So during this time, we also saw a huge rise in popularity of cryptocurrencies, NFTs, online payments all together. And of course, the thing is, cryptocurrencies promised cheap, scalable, and almost free online transactions for everybody. But there is another truth to that. And that truth is called network effects, and many people do forget about that. Because sure, in theory, every single consumer and every single company out there could just switch to a Lightning-based, so on top of the Bitcoin blockchain, there's this network called Lightning for super fast transactions at almost no cost whatsoever. And every single business or consumer could, of course, switch to, for example, Strike app by Jack Mallers. This is another app like PayPal or Venmo based on the Lightning network, and they provide super cheap payments. No comparison whatsoever to the 2.3 to 2.8% that PayPal is charging. But again, that is where network effects come in, because consumers, human people, are lazy. We do like our habits, and we usually do stick to the ways we have always done things. And if we reach a point where everybody has installed PayPal or Venmo, you do not want to switch, because if somebody of yours comes along and say, hey, I have this new app called Strike and you can save 0.3% on your payments. Everybody else in your friend group says, I don't care. I don't care. Venmo works just fine for me. I do not want to switch. I do not want to install another app where I cannot PayPal or Venmo money to anyone because nobody has it except for you. That is the huge moat that such companies have created, and that is now protecting them from competition by younger up-and-coming companies with better tech. And so PayPal could, of course, establish the very same tech as, for example, Strike is using on top of the Bitcoin Lightning Network. And they will do so if there is necessity to do so, but as long as there isn't any necessity to do so, because their moat just works perfectly fine in protecting them, they wouldn't do it. Why would they? Why would they? And then coming back to network effects and convenience, sure, of course, it also was a huge factor that Apple rolled out their Apple payments even more thoroughly, and also Google payments became more popular during this time. But I mean, sure, that was huge competition, but what else is there to come? Of course, Google has a huge network effect with Android devices, and also Apple has this huge network effect that they now already have leveraged and have established in the market. So what more negative surprises is there to come? I don't see anybody else coming up in the future challenging PayPal in their realm. So then, if you allow me to adjust your focus for just a second, coming back to the chart, what I'm seeing, mostly looking at PayPal, is not this huge drop from $310 down to currently $41. But what I am mainly seeing, and what I would advocate you should also see and look at when you look at the stock of PayPal, is the following. Going to the annual numbers here, we saw not just a collapse in stock price, but what we saw is a huge discount on PayPal, and that discount growing and growing and growing. Back in 2021, PE ratio of 54. That is an expensive company. Back in 2022, we already came back to 34. That is about, I would say, what is fair in recent years for a tech company that is still growing. 2023, already down to 16. This is completely average, normal, nothing to see territory here. 2024, we had a little rebound up to 21. So got a bit more expensive here. 2025, 10.8, and now currently 7.7. So if we then bring in just a little bit of wisdom from the legendary Warren Buffett, the key to long-term success in the stock market is not jumping on every single trend before it starts, because that is impossible. But the long-term trend for profitability in the stock market is finding good or great companies at great prices. And I would argue that PayPal has hit this exact spot right now as we speak. But regarding our analysis, of course you do know, we are an analysis company that focuses on Elliot wave counts, and we have concluded that overall, already back here in 2021, we had established the wave 1 top, and what we see afterwards was a wave A correction coming down. We saw an overshooting B wave, so a little exaggeration of the market up to the real numerical top of $310.16. Ever since we saw a 5-part sell-off in the wave C to follow, completing the overall wave W here, and another ongoing wave X, Y to follow. So a lot more corrective action, because even this rise here did not bring any impulsive structure, but brought corrective structure. That's why we have concluded that another wave 2 low is to follow here. And even from current levels, even just from current levels, $41. What we see, just based on Elliott wave extensions, would be a minimum target of $670 in the next upcoming wave 3 here. And that is only on the downside, and we're already talking 1500%. Optimum target at 223%, fib extension, we're already talking 1700%. I do not even want to go higher because nobody will believe me yet at this point. But this is a mathematical concept anchored in market psychology, and it rarely fails. Does that mean that we're going to see that by early 2027 already? Probably not. And to be quite frank, I cannot give you any numbers in the perspective of time, because Elliott wave theory deals with pricely extensions, not with timely extensions. But anyways, this target zone here has to be adjusted as we go along either way. What is important is the following. Right now, we have dipped into our long-term entry target zone for PayPal. And if you have watched the channel for any number of time, you of course know that we are a company that offers paid market analyses on a daily basis, over 200 companies, and we send out updates as soon as anything changes. We send out updates to a model portfolio, to basically anything that happens in the market, entries, exits to our model portfolio, scenarios that had to be adjusted. And so since we are right now in this active target zone, sadly I cannot share the exact price numbers here with you as I did with this long-term zone, because just as a courtesy to our paying subscribers, right? But this target zone here has been on the chart for a long time, I'm promising you. And if you also want to get such target zones ahead of time, down there in the description there's a link taking you to our website. Many different packages out of different markets that might be interesting to you. So if that is interesting to you, and if I could welcome you as a subscriber, it would be an honor for me. Right, so before I wrap it up, usually in every single video where I look at PayPal, I also do look at Block. Because one of the very first videos that I ever did here on this channel was a video comparing PayPal and Block to one another, and also drawing this analogy of them really running a race against one another. Because whenever over the past 2 years I looked at the stock price of PayPal and Block, which both of them I held in my portfolio, they were just completely mirror perfectly tracking each other. Sometimes one was ahead, then the other was ahead, and not just in the pure structure of their chart, but also in overall price levels, right? I mean, it is just too obvious not to see, right? So we saw this huge high here in COVID times. We saw the first high and we saw the overshoot in the wave B here for PayPal, and the very same thing happened also for Block. We saw a wave 1 here, we saw a little overshoot in the B, and now currently we are just a little different here in our count, because for PayPal we have concluded that right now the wave 2 is finally in and we are good to go. We are off to the races. And with Block we have concluded that the wave 2 already was in back in 2023, and ever since we have already started the wave 3. However, with the newest price action in Block, that is up for question. That is also why I have not brought the 4-hour chart here with you, but only the 2-week chart. Because on the imminent short-term count, our analysis team is currently revisiting our count altogether. However, the long-term expectation does remain the same. We also do see a wave 3 to follow for Block. We also do see a bright future for Block, and the levels are somewhat similar. So up from current levels, $57 right now as we speak. We're talking about roughly 700 to 900% here in the optimum target zone between 161 fib level and the 200 fib level. But anyways, my main goal of this video really was to give you a better understanding on the stock of PayPal, and to maybe also relieve a bit of your worries, because that company right now is more attractive than ever, not less. And Block, yeah, I mean, remains to be seen, and I will give you updates here on this channel, because it really remains to be seen whether we can hold this wave 2 low here back in 2023, or whether PayPal is just the one running up and Block will follow them down to the trenches, also establish another lower low, and in this case we would need to revise our count altogether, pull the wave 2 low over here, see where then we can establish a pivot and really start this wave 3, because Elliott wave rulebook clearly states if we are inside an impulsive structure like we currently estimate, we cannot, and I repeat, we cannot go beyond the beginning point of this impulsive structure, which would here with block be roughly the $36 level. So then, I hope this was helpful for you. I hope it helps you to be more profitable in your trading. As always, do not forget to turn on the bell notifications as soon as you subscribe to this channel, because there's a lot of free value that you'd be missing otherwise. Stay tuned. See you in the next one. Take care.